So guys, we are going to discuss today study unit number 17. And please remember study unit number 17 is about internal controls. And in this internal control means the main topic for the discussion is what? Corporate governance. This is the main topic here. Then we have a unit number 18 that is also relevant to internal controls. But in unit 18, we will discuss more about controls and security measures, like if you're using some kind of IT equipment also. So these things we will discuss there. So but here, unit 17, we are going to discuss. Please also remember unit 17 plus unit 18. So this section is called what? Internal controls. And it is going to be your 15% of your exam, and it is totally theoretical area. So there are no calculations inside. So under unit number 17, we have a first topic. The first topic is called what? Corporate governance and regulations relating to internal controls. So we have a first topic 17.1. So the word first, let me tell you about something about governance. Corporate, corporate means here we are talking about companies. Governance means to say how to run a business. Obviously, to run a business, we need policies, procedures, good people. So we need other things also that I'll explain. But very first thing which I want to explain, because this picture is really important to understand. Then if you will understand this picture, then it will be easy for you to understand the definitions. Okay, so here we go. I'm going to show you first picture for governance structure, like how organizations are structured usually. Okay, so please remember, I'm starting from here, from this section, because usually in companies on the top we have what here? Board of directors. In board of directors we have usually two types of directors. We have EDs, executive directors, and we have NEDs, non-executive directors. Understood? So what is the difference between executive directors and non-executive directors? I can just give you simple idea. Executive directors, actually they are a permanent employee of the business. So they are getting perks and benefit from the business, right? But non-executive directors, so they are not getting salaries, higher salaries like executive directors, no. But for example, I'm just giving example. Let's say if you will select any person from the royal family, he don't need money actually because they're already rich, right? So maybe if you will ask them to be the part of your board of directors, right? So what he will do, he can just attend your board meetings, right? But he don't need huge salary like other executive directors. But for the sake of name, he can join your organization, right? So non-executive directors usually they are not getting higher salaries. Okay, they are not like a permanent employees. You can say they are not getting higher salaries like executive directors, but still they have equal power. Executive directors and non-executive directors, they have equal power, like in decision making whenever voting is required. So obviously executive directors, they can also cast vote on major decisions. Non-executive directors, they can also cast vote on the major decision because they have equal power, right? This is what on the top of the companies we usually have board of directors, and board of directors may have different committees also inside the board. For example, you may have compensation committee. We'll talk about this committee. You may have risk committee. You may have what? Audit committee. You may have nomination committee. So many committees could be the part of this board of directors. But as per US studies, so these at least 3 committees should be there. Okay, these 3 committees are the part of the board of directors, because these committees, will talk about these committees, okay, mostly headed by independent directors. Independent directors mean to say non-executive directors. Understood? So they are called independent. So mostly these committees will be headed by non-executive directors. It means if I'll say compensation committee, it means we are talking about board of directors. If we will say risk committee will do this, it means we are talking about what? Board of directors. If we'll say audit committee should do this, it means we are talking about what? Board of directors, because few board members will be the part of these committees also. Understood? So it means in US structure, so at least there must be a 3 minimum committees, okay, in the board of directors. Which 3 committees? Compensation, risk committee, and Audit Committee. Okay, then what? So we'll explain one by one, don't worry. After that, we'll come back here. So then guys, this board of directors, obviously this board will hire and oversee what? The chief executive officer. CEO is appointed by whom? By the board of directors. Understood? And then the CEO, they may hire what? The other officers. The word officer, when we use, we talk about C-level people. The chief financial officer, chief operational officer, chief executive officer. More usually, officer word we use for C-level people. Understood? Then what? Obviously, the other officers, obviously, they will direct what? Day-to-day operations of the business, right? Day-to-day operations mean to say the employees. Understood? Then we'll come back to the board of directors again. Again, this board of directors, you can say this audit committee. Audit committee will hire and oversee what? Independent auditors. Independent auditors means external auditors. Okay. And obviously, audit committee will also deal with internal audit. I'll explain later, but I'm just telling you. So the audit committee will hire and oversee what? Independent auditors. And independent auditors, they do the audit of financial statements, and they also assess the internal controls of the business relevant to the financial statements, right? Then what? Obviously, this when we do the independent auditors, when they do the audit of financial statement, obviously we also have another audit department within our business that is called what? Internal auditors. So sometimes internal auditors they may use the work of external auditors. Sometimes external auditors they may use the work of internal auditors. But here independent auditors mean to say the external auditors. And then what we have, obviously when external auditors they do the audit of financial statement, sometimes they use the work of internal auditors also. And internal auditors are you can say a separate department within the company. Okay, they also do the audit, but their focus is not only on financial audit. They don't do audit only of the financial statement. They do the audit of operations also, compliance and certain other areas. Okay, then what? So both independent auditors and internal auditors, they will report and coordinate with which committee? With the audit committee. Okay, this is usually the structure of governance, right? But here we go on the top, we have something else also. And then we'll start discussion. It's just overview I'm telling you. We have SEC. SEC stands for Security Exchange Commission. Usually you can say it is the board of stock exchange. You know, stock exchanges we have in our countries. So the board, governing body of stock exchange is called what? Security Exchange Commission. Okay, so what Security Exchange Commission? What they do? They enforce securities laws. Security means it's not about law and order. Securities means they enforce, they apply the laws and regulations relevant to securities, means stock, bonds, derivatives, these kind of things, right? So they develop the laws and regulations, and these laws and regulations are applicable on what? Board of directors, because board of directors are the people who are directing the companies. So actually laws and regulations relevant to securities are applicable on companies, but companies are directed by board of directors. So that is why we can simply say SEC enforce securities laws and regulation board of directors. Then you can see here, this is one more word, common shareholders. You have, shareholder. There are different types of shareholders, but we are talking about common shareholders. Common shareholders are those shareholders mainly which have who have voting rights, because there are preference shareholders also, but they do not have voting rights. So common shareholders, they have voting rights, and they are actually the real owner of the business, of the company. Reason they invested the money into this business. So what they do, they actually appoint the common shareholders. They appoint what? Board of directors. Okay. Then there is another body that is called what? PCAOB body. What does mean by PCAOB? PCAOB stands for Public Companies Accounting Oversight Board. Public Companies Accounting Oversight Board. It is another body in the US. Like for example, if you want to register an audit firm in India, so maybe you have to fulfill the requirement of ICAI, right? Institute of Chartered Accountant of India. I'm not sure, I'm just guessing it. For example, if you want to establish audit firm in Pakistan, you have to fulfill the requirement of ICAP, Institute of Chartered Accountant of Pakistan. Understood? So same here in USA there is a body that is called PCAOB body. So if any audit firm want to operate in the boundaries of USA, so they have to fulfill the requirement of this body. Okay, it means this Public Company Accounting Oversight Board. So they have two main role. The first role is they regulate the audit firms in the USA. It means if you want registered audit firms, you have to fulfill their requirements. Secondly, this Public Company Accounting Oversight Board, they also issued auditing standards, especially auditing standards relevant to public companies. These are their two main roles. But here, if you look at it, PCOB body regulate the public accounting firms. Okay, obviously, and public accounting firms are those firms which consist independent auditors, and independent auditors they do the audit of financial statements, and then their audit report is issued to the public. This is governance structure. Understood? Now I'm going to explain the definitions. This was just governance structure. My objective was here to give just overview, like what is the hierarchy within the businesses. Okay, so here we go. Now here we have first thing. Your book will start from here actually. Okay, so we have first thing here. So what is the definition of corporate governance? So I need concentration here. I'll give you a very simple example. Corporate means a company. Governance means a running of the business. Like how to run a business is called corporate governance. Usually in your normal life, if you will start any business, so you need certain things to run your business smoothly. What do you need? First thing, you need good people within your organization. Agreed? Right or wrong? Yes. Second thing, you need what? The policies. So what are the policies? Let me explain. I'll explain. So third word is what you need. What? The procedures. You need to define the procedures also. Fourth thing, you need to define what the processes also. And also you need to establish what internal controls. I would say these five things are the pillars for the success of business. You need good people. You need good policies, procedures, processes, and internal controls. Then maybe you can run your business smoothly and you can direct your business in the right direction. So let's understand these words. Then I'll come back to this definition. So what does mean the people, like the people who are working within your organization, you need a good people. So now what is the difference between policies, procedures, and processes? Because sometimes people are confused with these words. So they assume these are the same thing, but these are different things. So let's understand first policies. Your definition is written for policies. Policies actually set some parameters for decision making. So I'll give you example. For example, in our business, we have a loan policy. Loan policy is what? That our employees can avail the loan from our business. Okay, we are giving loan to the employees. So this is policy. So it defines what? Some parameters for decision making. So how now if an employee will apply for loan, it means it is as per our policy. Right or wrong? So we can take decision, yes, we can give the loan. So okay, but what are the procedures? What are the procedures? Policies what set the main parameters for decision. Then what are the procedures? Procedures, like for example, I can give you same example, first example. Okay, policies there that employees can avail the loan. But there is some procedure. There are some steps you have to take to get the loan. Okay, like for example, maybe you have to take first form from the HR, right? With their, maybe you have to fill some requirements like what is your monthly salary, right or wrong? What is your date of joining, right? In how many number of months you would return this loan, what is the amount of loan, right or wrong? So it will be written. Maybe you will fill that form. You will take the form from HR, you will fill it. Maybe then it is defined in the procedure that this form will go to finance department. Once this form will go to finance department, maybe finance department will take approval from some seniors, maybe from president or from like that. Okay, so he will take approval. After approval, he has to complete these things. What? Maybe he has to take blank checks from the employee, right or wrong? And then maybe he can sanction the amount of loan to the employee. This is written. Like what is written in procedures? Employee has to take form from HR. He has to fill. He has to submit this form to the maybe HR. HR will send this form to the finance department. Maybe finance department need approval from some seniors, and then they will collect some checks and then they will issue the amount. Okay, so this procedures step by step. Okay, procedure is what? On other hand, procedure explain how, okay, or they provide step by step instructions for specific routine tasks. Like what step by step instructions you have to follow. That is called what? Procedures. Understood? Okay, so it means to now I'm explaining what first processes also. For example, within our business, you may have different processes. You may have sales process, purchase process, payment process, receipts process. Like in accounting cycles, we discussed processes like sales receivable cycle. So what are processes? Processes means a series of actions or steps taken in order to achieve what? Particular, and like what actions we have taken, okay, to complete the sale. For example, sale process is there, so it is defined and these steps we have to take. What steps? For example, first, let's assume sale department will receive the customer order, then sale department will prepare sale order, they will send it to the, for example, credit controller. He will assess the credit worthiness, or he has assessed the credit worthiness, he will approve the sale order. Then approved sale order will go to maybe packing department, they will pack the goods. Then it will go to shipping department, maybe they will ship the goods. Maybe then it will go to accounts department, they will create invoice and record the entries into the system. So this process, like how this step will be completed, so which series of steps you have taken to complete a final step, that is called what? The process. Understood? And
but then there's a little difference between procedure and
procedure you can say on the paper. Process what? On the paper, but is defined, that is you can say procedures. Process can also be defined on the paper, but processes you have to also follow.
It's like actions.
Actions. Okay, so you can say procedures are kind of steps which you have to follow. So the action which you have to take, that is called your processes. Okay, now if you look at here, now I'm coming back to that definition here. So what they were saying, corporate governance is what it is. Now I'm explaining properly. Corporate governance, actually, it is the combination. Okay, to run your business, to direct your business, you need a good combination of people, policies, procedures, and processes, including internal controls. What are internal controls? We studied internal control means action taken by management to mitigate the risk. To what? Mitigate the risk. That is called what? Internal controls. For example, maybe we may install cameras to reduce the risk of theft. Right or wrong? Maybe we can install biometric system just to ensure attendance on time. Right or wrong? People should not be paid for the time for which they didn't work. Right? So to mitigate the risk, maybe we need some time, double signature on checks to avoid fake payments. Right or wrong? So actions taken by management to mitigate the risk, that is called what? Internal control. So now look, for good governance, we need a people, policy, procedures, processes, including internal controls. Why? Because all this combination will ensure, this is the actually objective of corporate governance. The good combination of all these things will ensure that an entity effectively and efficiently directs its activities towards the objective of its stakeholders. Like we are directing the business, okay, to fulfill the objective of stakeholders. This is the objective of corporate governance. Okay, what is the objective? That we are directing the companies in the right direction. But to direct the company in the right direction, okay, or to get the result of efficiency and effectiveness, you need good people, policies, procedures, processes, including internal controls. Now from here, there is a one word, because we have to meet the objective of stakeholders. What are stakeholders? Stakeholders are persons or entities. Could be individual people, customer, supplier, it could be entities, other companies also, who are affected by the activities of the entity. Okay, those are called stakeholders. Stakeholder can also define this way: those people or entities which are having direct or indirect interest within your business. So those are called your stakeholders. So there are various stakeholders. So they have direct or indirect interest in your business. For example, they may have shareholders. Shareholders, the owner of the business. So their interest is there, obviously. They want capital appreciation of stock prices. Okay, they want dividend, they have interest. Okay, employees, they also have interest within the business, they are receiving salaries. Suppliers, they are also getting payments against the goods and services which they are supplying to you. Customers, they also have interest in your business because your quality of the product can affect the customers, they are using your product. Even the neighbors of the entity is also your stakeholder. For example, in my area, there is a sugar industry. When I used to go to school, at that time, obviously we were seeing these things. There was a sugar industry which was, you can say polluting the environment through smoke. If you will put any white cloth to dry outside your house, so maybe morning, if you will see in the season, you will see it is getting dark circles on that, the white cloth, right? Plus, it can create the problem for breathing of the people also, right or wrong? So it means these people, even community, even this environment is your stakeholders. Regulatory authorities are also your stakeholders because they also have interest. They want to get tax from you. And plus, they have interest. They want to enforce laws and regulations on you. So this is what is called stakeholders. So this is the definition of corporate governance. Now here we have a other word to understand. Other words are what? Corporate governance can be either what? Internal or external. Like rules and regulation could be internal or external. Okay, so what are the examples here? Let me explain here. Internal, first I'm telling you. Corporate charters, bylaws, board of directors, internal audit functions are the examples of internal corporate governance. So let's understand the word. What does mean by corporate charter here? Okay, corporate charter first. Corporate charter means what? Here it is defined. Corporate charter is a document. It is a document filed with Secretary of the State or Registrar to establish a company as corporation. Like when you register your business in USA, so there is an office of Secretary of the State, which is also called company registrar. So you have to go there, obviously. So you will fill a document. Sometimes it is also later on. I'll explain articles of incorporation. That is also same document which you file with the security, which you will file with the Secretary of the State, and in that document some information is provided. Okay, so that is called what? Corporate charter. So what it includes? The corporate charter must details the governance structure, board of directors, etc. Governance structure you have to provide. Okay, objectives of the organizations, operations of the organization, as well as other major details. Maybe it may include the office address, the list of the incorporators, name of the business, what is your name of company. So this information is included there. So all this is called what? Corporate charter. Understood? Now here we go. After that, a word is there, bylaws. What does mean by bylaws? So bylaws is explained here. Bylaws again are a document used by organization to establish its internal management by setting out what? Rules and responsibilities for what? Shareholders. What are the rules and responsibility of shareholders, directors, officers? The bylaws set the rules for meeting, also in which cases you can call a meeting, maybe meeting of shareholders, board of directors, and specify voting also in which kind of decision making shareholders can vote, directors can vote. So all these things are listed under what? Under a bylaw.
So is it similar to policies?
You can say, but it is different. Policies are very short, so this thing is little bit different. Okay, policy, you cannot, policy is to run your operations. It's relevant to run your operation, and this bylaws, it's run to run your overall business and decision making process. Understood?
Yes.
So this what is your called by law. So here we go. If you will look at here. Now, if you look at here, I'm coming back here. So because actually what I'm trying to explain the words because these words are not explained in your books. Okay. So what I was telling you, corporate governance could be what? Internal, it could be external. So for internal corporate governance, remember the words. Corporate charters are internal corporate governance. Bylaws are internal corporate governance. Board of directors also internal. Internal audit department is also internal. What are external? Laws and regulation, which are issued by regulatory bodies. For example, FTA in UAE, they are issuing VAT or income tax relevant documents. Maybe you have other ministries. Okay, they are also maybe issuing laws and regulations relevant to employees, environment, etc. So laws, regulation, and government regulators. Regulatory means those entities, government entities who are issuing regulations. Okay, who enforce them are what are the example of external corporate governance. So now if you will combine it, it means to run your business, you need to follow your internal policies, procedures. Okay, you also need to follow external laws and regulations. Understood? So you cannot avoid any one thing out of them. So here we go. This was all about definition. Now there's another word which is called what governance practices. Like how we apply the corporate governance. Actually, guys, so governance practices reflect the organization's unique culture. Obviously, some organizations are having very positive cultures, right or wrong. Some may have negative culture also, but we always want good culture. Culture means to say what the how the culture is defined, the way we do the things around. That is culture, right or wrong. So now governance practices. Governance practices mean to say it reflect what organization culture, and then what is the culture? What is culture? Here it is defined. I said in one line, culture is the way that we do the things around. That is called what your culture. So culture, organizational culture, always set what values, objectives, and what strategies. You have to remember these words. I cannot say anything. Okay, you have to remember these words. Like what does the culture? Culture define what? Culture set the values, objective, strategies, define the roles and expected behavior also. What we expect from the people, how they should react. Okay, they also measure the performance, right? In some organization, we have a very strong cultures for the performance measurement. Better in some companies, you may have informal system. In some businesses, you may have formal system. Also, culture includes what? Culture specifies the accountability. Accountability means that you are responsible for your actions. If you're taking positive actions, maybe you will be rewarded. If you're taking negative actions, or maybe you are, damaging your organization, so you may be punished also. So here, culture means that these words you have to remember what set values, objective and strategies, define roles and responsibility. Okay, measures performance and specifies accountability. Okay, now here please remember why. What are the purpose of governance practices? Why we need good practices, good culture within the organization? So it has several purpose. These are the purpose you need to memorize also. I'll explain. The good practices will ensure. The good practices will what? Ensure. Like good governance will ensure that we are complying with society's legal and regulatory rules. Good governance can help you to ensure that we are following laws and regulations. This is the first purpose. Second purpose, the good governance can ensure that what we are satisfying the generally accepted business norms, ethical principle, and social expectation of the society. Like simply, we are fulfilling the expectation of the society also. For example, society, they want us not to pollute the environment. So we, as a good governor, we need to ensure we are not polluting the environment. Right, Aram? So the second purpose is what? The second purpose of the good governance is to ensure that we are fulfilling the expectation of the society. Understood? Third purpose is what? The good governance will also ensure whatever information we are providing to the stakeholders. So that that information should be what? Should be true. This point I'm explaining. Okay. So good governance will ensure that whatever we are reporting, so reports fully and truthfully with stakeholders. We are reporting everything to the stakeholders, including the public, to ensure accountability for its decisions. Like whatever, and simply whatever we are reporting to the public or to the stakeholders, so that is true. Okay. So we are not lying to them. So good governance will ensure this also. The third point, which I skipped, I'm explaining now. So governance will also, good governance will provide overall benefit to the society and enhance interest of the specific stakeholders in both long and short. Like it means the purpose of good governance is to provide overall benefit to the society. Sometimes we do corporate social responsibilities also. Like how you can provide the benefit, like for example, sometimes large companies, they may construct playgrounds for the people, right or wrong, free of cost, right? So parks, dispensaries, things like that. So good governance will ensure that we are providing the benefits to the society also. So four requirements are there. Four, you can see the purpose of good practices and good governance. What is first? It will ensure that we are following laws and regulations. What is second? We are fulfilling the expectation of the society. We are providing the benefit to the society, and whatever we are reporting, that is based on truth. Understood? So these are the four, means you can say, main purpose of the good practices. Understood?
Yes.
Then what we have here? Here we have some general discussion. Okay, it is also called governance in corporation. So there's a one word that is called, look at here. So unlike a sole proprietorship, you know, the sole traders, small businesses, or general partnership, because partnerships are also smaller than companies. A corporation is a legal entity. Legal entity means say what? Legal entity means to say, so the corporation is treated as legal person with its rights and obligation, or the company is different from its owners. Later on, that is called separate legal entity, or we can say company is a separate entity. Right or wrong, company will have its own rights and duties, its own responsibilities. Understood? So that is called what? Legal entity. So they are saying corporation is a legal entity created under authority of state statute to carry out the purpose permitted by statute and articles of incorporation. Like in simply, when you register your business, this document you file at that time, like a corporate charter, articles of incorporation. Like when you register, obviously your business, you have to provide information to the secretary of the state or to the registrar. What information? Like, for example, you have to provide information about, okay, about the name, corporation's name, number of authorized shares of stock, like how many shares you would issue over the life of the business, street address of the corporation, initial registered office, like you have to provide the address of your registered office also, name of the registered agent at the office, like if regulatory authorities want to communicate anything with which person she should consult in your business, so you have to provide their address, name and address of each incorporator who incorporated that business, so you have to provide their name also. This is what is called articles of incorporation. This I told you, and this must be filed with what? With the secretary of the state or another designated officials. Okay, and articles must include these things. Understood? I told you, we always treat the company is what is the separate legal entity. It is a legal person. It has its own rights and obligation. Then I told you about what? About the articles of incorporation. Now let me tell you here about shareholders and directors. Then I'll move to that important side. Number one here, look, shareholder. Who are the shareholders? I'm talking about common shareholders. So corporations are governed by shareholders. Actually, they are the owner, and shareholders always appoint what? The board of directors. It means company is owned by shareholder, but company is directed by board of directors. Who elect the board? Shareholder. It means I can say the board of directors are the agent of the shareholder, right? Right or wrong? It's investment of the shareholder, but board of directors, they're taking care of the shareholders of shareholders investment. It means board of directors are the agent of the shareholders. So the board of directors should take all those decisions which will give the benefit to the shareholders. They should avoid any conflict of interest. So here we go. How shareholder is defined? Shareholders are the owner of the business who elect the board of directors and approve fundamental changes in the corporate structure. Like if you want to make changes in structure, maybe you want to bring new directors, maybe you want to fire one director. So maybe we need permission from the shareholders. Understood? Then what? Then we have a word here, directors. What word we have here? Directors. So let me tell you, I already explained to you. Now information will be linked. Okay. I told you on the top of the company, we have a board of directors, right? Right or wrong? Then board of directors. I told you, as per US governance structure, there must be a minimum 3 committees. Which 3 committees? Risk committee, audit committee, and compensation committee. So let's understand first these committees, and then I'll explain the overall roles and responsibility of board of directors. So I'm explaining first committee here. First, I'm explaining here committees. That's because board of directors include these 3 committees also, as per US governance structure. Which 3 committee? Audit committee, risk committee, and compensation committee. So let's understand what does mean by audit committee. Guys, please remember here, audit committee, okay, they are telling you first of all, the act requires. Act means say there are certain acts are there, like Sarbanes-Oxley Act is there. So that act requires that each member of issuers audit committee be an independent member of the board of directors. Mostly like these committees are headed by non-executive directors. Because those people are considered as independent people. Okay. Then in audit committee, they are saying there must be at least how many people? Three peoples must be there in audit committee. And out of these, minimum three, I'm saying maximum, you may have more than that. But minimum, the composition of audit committee is what? There must be three independent directors. Right or wrong? Independent members. Understood? I'll use the word independent members. And but one member must be a financial expert. The reason, because this audit committee is going to deal with audit relevant issue. So obviously one person must be financial expert. What does mean by financial expert? Financial expert means they also define financial expert means the person must have experience and knowledge. He should know what is auditing, what is accounting, reporting, right or wrong. So he should know what these things, what is taxation. So obviously these qualities are there normally in the person who is the chartered accountant, right? So he know audit, etc. If he's having experience, he must have experience and knowledge about these things. So that is called what financial expert. So I told you first thing about audit committee. There must be a three independent minimum, three independent member, and one member must be a financial expert. Understood? This is the composition of audit committee. Now I'm going to tell you what is the role of audit committee. Why do we need audit committee actually? What is function? So the functions of audit committee is to deal with what? With internal and external audit. How? Now let's have a look. Please remember, head of internal audit department. We usually say HOD, head of department, but in proper language, head of internal audit department is called what? Chief
Audit.
Executive. I'm talking about head of internal audit. Is called what? Chief Audit Executive in proper language, CAE. Now, please, I'm going to explain the rules. The roles of audit committee or the functions of the audit committee or the responsibility of audit committee. So here we go. First of all, with respect to external audit, what is the role of audit committee? Please remember, EC stands for audit committee. Audit committee will appoint the
Audit firm.
audit firm. Audit committee will appoint the audit firm. And second is what? Audit committee will decide the fee of external auditor also. Like for example, who is going to be our auditor in the next year? KPMG, PwC, or other firm. So who will decide? Audit committee. Then what? How much fee we have to pay? Okay, what amount we have to pay? So that will also be decided by audit committee. They will deal with audit firm. Third is what? Audit committee will receive all the reports. As I told you, external auditors, they will come, they will do the audit of company's financial statement. They will also check the related internal controls, and then they will draft their report and they will submit to the audit committee. Then what? Audit committee will solve the clash of external auditors. If external auditor is having any clash with the management, maybe external auditors, they want some documents management is not provided, so they can report this issue to the audit committee and audit committee will resolve this issue. Understood? Then what are the functions of a role of audit committee with respect to the internal auditors? Please remember, audit committee will appoint CAE, head of audit, internal audit department, is appointed by appointed by audit committee. Audit committee will decide the salary of CAE, what amount they should pay to the CAE. Who will decide? Who will negotiate? Audit committee, or maybe they will just give the budget to the other seniors, they can negotiate. Then audit committee will approve annual audit plan. You know, internal auditors, they always prepare annual audit plan, like how many audits they will do in this year. When first audit will start, when second audit will start, when third audit will start, right? So they prepare this plan. This plan is always handed to the audit committee, and audit committee will approve it. Then they will follow that plan. Okay. Then audit committee will receive all reports from internal auditor. So then audit committee will solve the clash of internal auditors also. So these were the functions of what? Audit committee. And mostly the question in your exam, they will ask about the composition of audit committee, and they will ask you the roles and responsibility of audit committee. Then I told you again, I'm taking you back. I told you under the governance structure, I told you on the top, we always have what? Board of, we have a board of directors. In board of directors, these three committees will also be there: compensation committee, risk committee, and audit committee. I have explained to you the functions of audit committee. Now I'm going to deal with what? With the risk committee, and then I'll talk about something about compensation committee, and then we'll see overall role of board of directors. Now I am talking about risk committee. Again, guys, risk committee, obviously as per word, within our organization, we have a risk management department. Okay, these people, there is a department with the name of risk management. So these people are responsible to manage the risk. Understood? Or maybe they will supervise the risk management process also. So risk management process, I'll explain the next class. So, but this risk management department, obviously it works under the supervision of risk committee. Understood? So now look at a risk committee may be created, but it is compulsory under US government governance structure. Risk committee should be there. So why it is created? So because this committee can help to identify the key risk. Risk could be at strategic level. Risk could be at operational level. Right or wrong? So they can help to identify the risk. They can connect them to the risk management process. For example, let's assume there is a risk of exchange rate. I'm just giving you fake example, but in order to understand, there is a risk of exchange rate because maybe you are doing transactions in international market, you have receipts and payment in foreign currencies. So you have risk of exchange rate. So this risk is identified. Now, please, I have a question. Who will manage this exchange rate risk? It is the responsibility of board of directors? No. So they will hand over this risk to the risk management department. And then risk management department, what they will do? They will call people from finance department because it is their responsibility, right? Because exchange rate risk is relevant to finance. They will call finance senior people and then they will ask them to take a certain initiative to manage this risk. So this is what is the next step. So risk committee may be created that identifies key risk, connect them to risk management process, and then what? Delegates them to risk owner. Risk management department, they can delegate this to risk owner. Risk owner means it who is actually responsible to manage the risk. As I give you example, for example, risk relevant to finance, it is the duty of finance people, right? So they will delegate, okay, manage it, and then consider, they will also check whether tolerance level delegate to risk owners are consistent with organizational risk appetite. What is risk appetite? Is another word. We'll see these things in risk management, by the way, but here they use the word risk. There are two things. One is called risk appetite. Okay, so let me explain risk appetite. Actually, risk appetite means how much risk you are willing to accept. There's one more word is that is called risk capacity. Risk capacity. And one word is the risk appetite. Risk capacity is what? For example, he is multi-millionaire. It means he can invest millions of dollars, right? So if he can invest millions of dollars, it means his risk capacity is more. For example, I'm a poor person. Maybe I can invest only $100. It means my capacity is to be a loss is only $100. So other person's capacity is to be a loss of millions of dollars. This is capacity. But what is risk appetite? Risk appetite means how much currently I am willing to take risk. Maybe I am willing to take risk on $50, $60. Maybe other person is willing to take risk on $500,000. That is called risk appetite. Like your willingness to accept the risk is called appetite. How much risk you can, maximum risk you can afford, you can assume, that is called risk capacity. So risk committee will ensure, what they will ensure, whatever risk they are taking, so that is within their appetite, within their willingness, right around. So they will ensure these things. So 4 points I told about risk committee. Number one is what? They will identify risk, then they will connect with the risk management process, will be delegated to risk owners, and then they will also monitor it. Is it within their willingness to accept the risk or not. Understood? So this is what is the risk committee role. Is that clear? So then we have a role here. There is another committee that is called what? Remuneration committee. It is also called what? Which committee? Compensation committee. Actually, look, again, few board members will be the part of this committee also. Compensation committee. So what it means? Obviously, if board of directors, let's you are going to appoint board of directors. So I'm just giving you extra information. There is a one nomination committee is there, nomination, which is not written here. Under British syllabus, 4 committees should be there minimum: risk, audit, compensation, and nomination. But under US structure, 3 committees minimum should be there: risk, audit, and compensation. So what is? Let me just quickly tell you about nomination committee also. For example, when board of directors are elected or appointed, what is the process they follow? Obviously, they will advertise the jobs. Okay, after the application will come to the nomination committees, they will shortlist. Nominating the directors. They will shortlist the board of directors, and then they will call a shareholders meeting. And in the shareholders meeting, they will ask shareholders. Actually, they will inform about each director. They will provide information. Like, for example, we have Mr. A. This is the qualification of Mr. A. This is the experience. Okay, and the people, the shareholders will cast a vote on that. Who likes Mr. A? They will cast a vote in favor of Mr. A. Then they will nomination committee will nominate Mr. B, Mr. C, their education, their experience, and shareholder is casting the vote. And obviously, the person, the director who will get the majority of the vote, he will be elected as a board of directors. Okay, so this is beautiful story, but actually, one person can do this thing only. Because who is appointing the board? Shareholders. And if you are only one person who hold 55% of the voting rights, on 45% are minority, like us sitting there. Okay, but you are the one who hold 55% voting rights. So it means you can, if you would say, I want to select this person, you can select it. Even we are making noise, no, we don't want to select, but because you have majority. So that is why, for example, in India, you have a Mukesh Ambani, right? Bill Gates, these kind of people, because they own more than 50% of voting rights. If they own more than 50% of voting rights, it means every decision they can take, because they are the major shareholders. They have the majority of the voting rights. Understood? But the process is what? I told you, the nomination committee, they will nominate the board of directors in the shareholders meeting. Shareholders will appoint. This is the role of nomination committee. Now, what is the role of remuneration or compensation committee? This committee will decide the perks and benefit of top management people, like what? Directors or maybe C-level people. Because director salary will not be decided by HR manager. Right or wrong? The seniors people's salary should be decided by seniors. So the role of compensation committee is to set the perks and benefit of board of directors and C-level people. So these 3 committee I have already explained, right? Now, if you will go back, now I'm going to tell you in short the overall duties of the board of directors. Overall duties. So it is listed here. Almost you know all these duties now, because I have explained directly, indirectly, but few more points I have to add. So these are the overall duties of the board of directors. Number 1, selection and removal of officer. As I told you at the start, officer means C-level people. So who will appoint? The board of directors, like CEO, will be appointed by board of directors. But board of directors are appointed by shareholders. So it means board of directors, they can select and remove the officers. Another example, CAE. I told you, Chief Audit Executive, who is the head of internal audit department. It is also appointed by audit committee. Do you remember?
Yes.
So it means audit committee means a board. Board is appointing chief audit executive. Then what? Decisions about capital structure. Like, for example, should we issue bonds, stocks, or what? How much quantity of bonds we need to issue? How much quantity of stock we need to issue? How much money we should raise from the bonds, or through the how much money we should raise through the issuance of stock? Who will take decision? Board of directors. So this is called decision about what? Decision about capital structures. So like about shares, bonds, debt, equity, who will take decision? Board of directors. Third is what? adding, amending, or repealing by laws. Bylaws I explained at the earlier, right? If you want to amend any bylaw, you want to make some amendments, some changes in the bylaws. So again, who will decide? Board of Directors. Then what? Initiating of the fundamental changes like merger, acquisition, etc. What it means? Maybe you want to merge your business with another business. Maybe you want to acquire certain other companies. Maybe you want to sell some segment from your business. So who will take decision? Board of Directors. Then what? Decision to declare and distribute dividend. Like how much dividend we should pay? We should pay more dividend or less dividend or even no dividend. Who will decide? Board of Directors. Understood? This decision is also taken by Board of Directors. Then what? Then we have a setting of management what? Compensation. As I told you, compensation committee is there. So they are also setting the salaries for seniors, right? Senior board of directors, C-level people. So their perks and benefits are decided by them. So that's where it's written. So this is mostly performed by a subcommittee that is called compensation committee. But ultimately, this committee is a part of board of directors. Then what they're saying, coordinating audit activities. So most often performed by subcommittee called what? Audit. So audit relevant decisions. So many decisions are there, like who will be our auditors, who will be the head of CAE, what should be the fee we should pay to the audit firm, or what should be the salary of CAE. All these things are decided by what? Audit committee. And I taught you audit committee in much detail. The functions of audit committee with respect to internal audit and external audit. It means audit committee is also part of board of directors. It means indirectly these decisions are taken by board of directors. Then what? Evaluating and managing what? Risk. I told you risk relevant things are monitored, are handled by what? Subcommittee, which is called what? Risk committee. So generally these are the decisions or the duties of board of directors. Yes, I'm not saying this is the full exhaustive list, but it covers all main points. Clear? So this is what is the board of directors. And then if you remember, again, I'm taking back to the structure. Because my all this session regarding government governance, I'm starting from here. Then we know, obviously, the board of directors, they hire and oversee what? Chief executive officers, chief audit executive officers can appoint other officers, right or wrong? Other officers, they deal with the direct day-to-day operations of the business, right or wrong? And now if you look at it, we are talking about actually management. Management is responsible for day-to-day management. Management performs day-to-day governance functions and determines management. You can say like CEO and below level. So they are responsible because board of directors, look, please remember, board of directors, they're not responsible for day-to-day operations and they don't look either. Right or wrong? They are responsible for major decision making. So it is the responsibility of CEO. CEO, you can say senior management. It is the responsibility of CEO to look after day-to-day activities. They should monitor the performance of each department within your company, right? So management performs day-to-day governance function and determines what specific risks are to be managed, right? Obviously, risk management department, they will also be reportable to CEO, right or wrong? So they will say which risk they have to manage, who will be the risk on like this risk, for example, if risk is relevant to compliance. So compliance manager is responsible to manage it. So compliance manager will be the risk owner. If risk is relevant to, for example, operation, so operational manager is risk owner. He is responsible to manage it. If risk is relevant to finance, finance manager is responsible to manage that risk, right?
So
they're saying,
the CEO will look after the words.
because risk management department is there, that will also be under CEO, right?
Yeah.
CEO is also senior authority. Right or wrong? So it doesn't mean if you are reporting to board, so you are ignoring CEO, no? Right? So then they are saying how specific risk will be managed. In simple words, the day-to-day, the management perform day-to-day functions. Okay, even these functions are obviously under the are supervised by risk committee also, but it is the responsibility of management also, because there is a risk management department. Risk management department, so they do day-to-day these activities to help the board of directors. Then what? The functions of risk owner. Risk owner is what? the person who is responsible to manage this. Sometimes they may ask from here also. What are the functions of risk owner? Risk owner means ultimately who is going to manage that risk. Okay, so what is the function number one? Evaluating. This is just a theory wording you have to keep in your mind. Evaluating the adequacy of the design of risk management activities and the organization's ability to carry them out as designed. So simply he will check, he will ensure risk management is there. Risk management is properly designed. Design is there. Second, he will check determining whether risk management activities are operating as design. I'll give you example here. For example, finance manager is the risk owner for finance department. So obviously he will make policies there, right? For example, you cannot make payment without my approval, right? So you always need a signature on check. My signature you need, for example, right or wrong? For example, this person cannot post entry until unless it is approved by this person, right? So obviously it means this is the risk management design. Design is there to mitigate risk, right or wrong? Then what? So he will also check people are those following policies or not. You can say policies, procedures can be designed, but people are following those policies, procedures or not. So he will also ensure, that risk management activities are operating as designed. First step, what is ensuring? Risk management design is there. Second step, what is ensuring? They are operating as per design. Third, establishing what? That is what? Establishing monitoring activities. He will monitor. Obviously, maybe with the passage of time, sometimes he need to change something. So he will change it also. Then what? Ensuring that information to be reported to senior. Whatever information we are going to report to senior, and the board is accurate, timely, and available. So these are 4 functions of risk on this. What could be question? He will give you question like which is the responsibility of risk owner. He will give you 4 options. If any option is having this information, so that will be the answer. Sometimes he may ask the question, which is not the responsibility of risk owner. So if any option is giving other than these 4, it means that is not the responsibility of risk owner. Understood? Because theory, you have to obviously understand first, then the wording should be in your mind also to tackle the question. Understood? So this was what? The introduction to corporate governance. Understood? Now the next topic is what? Foreign Corrupt Practice Act. Let me stop this video and I'll record another video for FCP.